Well, happy Monday, everybody. Omid here with you again for another weekly market update. It's action packed, so tune in and I'll have you smarter by the time we're finished. Okay, here we go. As promised a few weeks back, we're going to report on crude oil prices as well as prices at the pump. This is really important because those two things are very much so tied into consumer sentiment about how people feel about the economy, as well as they're actually tied in very closely to mortgage rates. So, a little bit of a reprieve here, Monday to Monday. Last week, 5-4. WTI crude was at 105. Today's at 98. That's great. Brent crude was at 113. Today is trading at 104. So this is good news. Unfortunately, don't expect any of that to bleed over to the pump anytime soon. As a matter of fact, last week we had 582 for an average in King County, and now we're at 595. So all the gas across the board, as you can see in the different counties, is up. We'll keep reporting this back to you and keep an eye on it for you. Okay. Now, let me go through some important market highlights for you because I think it's important for us to get our heads wrapped around all this stuff. So, BLS jobs report was released last week, Bureau of Labor Statistics. The market was expecting 55,000 new jobs added, and these folks came in with a solid 115,000 jobs. I won't bore you with the details, but they're shaky at best. Inflation still is hovering right around 3.5%. I bet you by the time we get the CPI report tomorrow, we'll talk about that. I bet you we're going to see 3.7, 3.8. Home prices up just a tad at 0.4% year over year, and that's a national number. We'll talk about the NMLS data here in a minute. Now, here's something that's really disturbing: is homeowners insurance is up a whopping 64% in cost over the last 5 years. It's important for us to note that currently in King County, your principal, interest, taxes, and insurance payment that we all pay as homeowners, 22 to 24% of now is comprised of homeowners insurance and taxes. So we have to be very aware of that. Also, the NAR reports that Gen Z buyers, 35% of single female buyers are Gen Z. So they're the ones who are leading the pack in buyers. So if you are a female of Gen Z vintage, congratulations, that's awesome. And if you are a builder or a realtor, this is a sector that you have to pay attention to because they're moving and shaking stuff up. Okay, what's next? Northwest Multiple Listing Service. This is our greater King, Snohomish, Pierce County numbers. Active listings up 28.4% year over year. More houses on the market. That's great. Closed sales are actually down 3.7 month over month. Median prices 650, kind of unchanged. 1.6% month over month, but again, that month over month number doesn't really mean a whole lot. Mortgage rates staying elevated, staying pretty steady. We're not seeing any movements from the Fed at this point regarding this. And again, all things rise and shine on what's happening with the instability of the Iran war situation and what's happening with gas prices. We are seeing increased foot activity, foot traffic, as well as increased activity for accessing the key box, etc., both in month over month and year over year. So that's great. Yeah? Okay. To the portion where we talk about how incredible the portfolio is, and I've promised you I'm going to deliver you a piece of news every week that helps you figure out what's going on, especially if you're in real estate sales. So we had a partner of ours refer us a lovely, lovely client. This client needed to have a bigger space so she can bring her aging parents into her home and take care of them. She was a tech engineer, and unfortunately, she had worked in tech for years and years. But recently, as of 4 or 5 months ago, she had resigned her job and opened up a self-employment consultancy. Now, as most of you know, unless you have 2 years of positive tax returns on the books, we can't use your income. But this was a very strong client, and we sat down and we put her through the portfolio, and we figured out a way to do an asset depletion loan for her against her investment account, not taking any money out, just factoring in how much we could. That's called an asset depletion loan. As well as we were able to add a sibling as a non-occupant co-borrower. Now, it's important to note that both our borrower as well as the sibling already own their own homes. So we had to do this all on a non-contingent basis. We were able to get the approval secured through our portfolio. our referring partner agent was able to write a 1 million plus deal on the purchase of this home, and now will be also, after they all move in, be able to list the departing residents for our borrowers. So there's lots of revenue that was created by that real estate agent and lots of opportunity, and as well as the meeting of her goals that was created by First Security Bank. So I want you to be aware of these amazing programs out there, and really there's nothing else like the power of portfolio here at First Security. By the way, we were able to get her into a loan with an interest rate of 5.6% with no points. So that's amazing. Okay, here we go. What's going on in the market, you ask? Well, I got ADP jobs report coming out on Tuesday, but most importantly is the CPI, Consumer Price Index, measuring inflation. That's the one that I think is going to come in hotter than expected. My guess is 3.7, 3.8. We'll have to wait and see what's happening. Producers Price Index measuring inflation at a wholesale level that then bleeds out to our pocketbooks will be released on Wednesday. On Thursday, you have jobless claims as well as retail sales. Retail sales will be important because we'll see how we are spending the money. From a technical perspective, take a look at all that yellow marks there. Those are all the moving averages that are acting as a ceiling of resistance, not allowing that bond to go any higher and bring us some relief for the loans. As a quick reminder, if you're not following us on Instagram, please do so. We post daily updates in our stories that talk about not only the mortgage rates, but as well as what's happening that's driving them. Okay? Mortgage rates, 6.44 last week, 6.42 this week. Pretty flat. 6.59 on the jumbo, 6.59 on the jumbo. Please note that these are national average rates based on purchase transactions with 25% down and 780 credit scores. Definitely get with us or your favorite loan officer to find out what your exact rate is. Okay? As always, thank you very much for your attention. Please do subscribe, like, comment, and share so everybody can be as smart as you, and we will catch you on the next episode. Talk to you soon.